Oh. Yeah, hi guys. I hope it's all fine now. Yeah, now there is sound. No problem. So again, let's. Oh yeah, it will be audible. Just think in for a minute. Like I said, when I start, sometimes we forget to remove the mute. Now it's okay. So patience. So today's discussion on audit reports. Yes, good evening, everybody. Okay. Fine. Now you won't have any problem. Okay. Let us proceed further. Sorry about that. It's going on to some auto mute. So if I don't wait, let me just see if I can remove that option. If I'm not talking for 10 or 15 seconds, then it's going to auto mute. Just hold on. I hope you will be able to listen. Wait. That's what is happening. I didn't start anything, Francis. Nothing to worry. Please start again. There is nothing that I started. Yeah. In the meanwhile, I didn't talk for 10 or 15 seconds. It's going off to auto mute. Chalo, I think I disabled that option now. It won't happen. It should not happen anymore again. So let's get straight away into the discussion that we've been having for a few days. So now we will continue once again quickly. Wherein step number 1 is about engagement of the auditor. Now you have engagement of the auditor, followed up by step number 2, obtaining knowledge of client's business. Right? Engagement of the auditor, obtaining knowledge of client's business. Then this is followed up by audit planning. Then risk assessment procedures. Okay, then we have further audit procedures, performing all of those, gathering evidences, and then putting up them to documentation. So these are things that have gone by. These two are called as preliminary engagement activities. This here is called planning and risk assessment. Planning and risk assessment procedures. And then you have audit performance. Now step number 7 and 8, as you know, are forming an opinion. What is it? Forming an opinion. Now forming is an aspect that happens in your mind, while the next one is followed up by reporting, that is putting it in the form of a report. Now there are two parts to the story, as you can see in the title itself: forming an opinion and reporting. Now if this is the entire story that one has to take into consideration, what will be the requisite standards that one has to follow? How will we take all those things into consideration? That is the predominant story for us today. If you have to give a absolutely true and fair report, which is called a clean report, what will we be doing with respect to that? Then if at all you are going to modify something, What will be the reason for your modification? Why will you modify? That also will be an important question. And then it is also followed up by another standard which says that you are supposed to give a couple of paragraphs called emphasis of matter and other matters paragraph. And then we also have 701 talking about key audit matters. So all these are some things that we talk about in the 7 series. So now when we talk about those things in the 7 series, we have to stay put and very alert about this one. So let's go to standard number 700 straight away. I'm going to start off revising standard number 700 for you. Standard number 700, which is again talking about audit reporting, two parts to the story. So this is about issuing an unmodified opinion. So it also prompts you to figure out what sort of opinions are there. So we have two branches to standard number 700. One of which is called forming an opinion. Forming an opinion. And once you form an opinion, right, you have to obviously put it in the form of a report. That will be called as reporting. So forming an opinion and reporting, which is what are some important aspects that you have to take into consideration. So how will you form an opinion? If you form an opinion, then you can go ahead comfortably and report it. No. So why you are not reporting directly? Obviously, no, unless you come to a conclusion. To come to that conclusion only we need evidences. And after evidences, we are documenting those evidences into a proper form. And once they are documented in a proper form, you have something to report. So documentation will be your final step of performing. After that there is reporting. But in between these two, if you remember, we did talk about standard number 450. Okay, so I just want to draw back your attention to that. That is, after you finish the documentation and before forming an opinion, we get to standard number 450, which is called as evaluation of a misstatement. Evaluation of a misstatement. And in this evaluation, we compare the level of materiality versus aggregate value of misstatements. Do you remember this? The basket of misstatements and whatever we're talking about, aggregate value of misstatements. We compare that standard number 450 versus the aggregate value of misstatements, and that makes a lot of sense here. Okay, so that's a real serious point. Standard number 450, which talks about evaluation of a misstatement, wherein you are comparing the level of materiality with the aggregate value of misstatement. And if something is material, or where auditor comes to a conclusion that financial statements are not free from material misstatement, or where the auditor is unable to obtain sufficient appropriate audit evidences, then he will definitely have to modify his opinion. And but for that, he can always go for a clean opinion. So how do you think about modification? What will you do in terms of modification? That also we have to see. So to form an opinion, we know right from the beginning that auditor has to obtain what? The auditor has to obtain reasonable assurance. You can't get absolute assurance. So auditor has to get reasonable assurance that the financial statements as a whole are free from material misstatement. I hope all of you know that line. Now, in doing so, we got to take into account what sort of evidences that you got. Because whether sufficient and appropriate evidence has been obtained, whether uncorrected misstatements, if any, are there, that is a basket of misstatements are there, are they material? Now, if they are material, that is why we discussed about the comparison in 450 right now. If they are material, then you will definitely not be able to give a clean opinion. You might have to modify. What will you modify? That also we will see. And apart from this, there are a set of evaluations that the auditor has to do. So what I want you guys to understand here, in these two branches that you see, which is about standard number 700, forming an opinion and reporting. Forming an opinion has three branches. Okay, this forming an opinion, it has three branches. One, whether sufficient and appropriate audit evidence has been obtained. Whether sufficient and appropriate evidence has been obtained. Okay, this is the first question that you will ask. If you are not feeling comfortable about getting evidences, then you definitely will not go ahead and give a report. Whether sufficient and appropriate audit evidence has been obtained. 2. Whether uncorrected misstatements, are material. So are there any uncorrected misstatements? And if there are any uncorrected misstatements, are they material? Whether uncorrected misstatements are material, two things, either individually or aggregate. And then the auditor has to make certain evaluations by auditor. Now this piece is a very important one in standard number 700, because these sort of evaluations that are to be made by the auditor, they can be qualitative aspects. So this is one very important story of standard number 700. You have to do all this analysis and only then take into consideration as to whatever you do. Okay, so are you clear till here? This is the first part of the story, because this is about forming an opinion. And now once you form a opinion, then you have to put it in the form of a report. Also mind you, what sort of qualitative aspects are to be reviewed? They are to be checked, because okay, let me also tell you that there are one more type of evaluation. This, after qualitative evaluations by auditor, he will also do something called as specific evaluations. Now let us continue in the next slide to discuss this in detail. So I'll take evaluations as the key, and we'll break it down into two. Qualitative evaluations, and then we have quantitative evaluations. Okay, wait, not quantitative, we'll call it as specific. Though numbers are involved in that, we'll not call it quantitative, we'll stick to the words that are used in the standard. So these are called as specific evaluations. Now when you say qualitative, do you remember standard number 540, wherein we speak about accounting estimates, then communications to the management and TCWG, whether all communications have been appropriately done to management or TCWG, and all the judgments made by the management, disclosures given in the notes to accounts, everything where numbers are not involved. Okay, so four aspects. First one is about all the judgments by management. About what? About all the numbers that have been and disclosures that have been put in the financial statements. Then communication to TCWG as discussed in SA-260. There are about communications to TCWG, whether all the requisite communications which are supposed to be made to the TCWG, have they been made or not, and whether there is any possible, or whether there are any indicators, I'll use the word, whether there are any indicators of possible management bias. You know what is possible management bias, right? That they should normally follow impartiality. You should not be partial on anything. But is there anything which indicates that they have been partial? Indicators of possible management bias. And fourth point I think is about SA-540's compliance, that wherever accounting estimates have been made, that whether SA-540 has been followed or not. So all these are evaluations to be made by the auditor. While making these evaluations, if again the auditor is not getting sufficient and appropriate audit evidence, that is a cause of concern, because obviously he will not get that confidence that qualitative aspects have been covered. So he will take all of these points into consideration. And then when you talk about specific evaluations, we have a few regular points to take care of. What are those? The first point there will be about the accounting standards that are followed, financial statements, whatever accounting policies. Okay, then yeah, you can say uh, consistency of accounting policies. Remember, so I'll specific evaluations. I'll write for you simple disclosure of accounting policies. Disclosure of accounting policies, consistency of accounting policies. Now, two things, whether all the accounting policies followed have been disclosed properly in the notes to accounts. Two, whether there is consistency. Now, if at all there is any breach in the rule of consistency, immediately don't jump and say they did a mistake. You guys know that there are three reasons when we can change the accounting policies. Remember, if it is required by a statute, another accounting standard, or results in better preparation and presentation of financial statements, we can do so. But one thing that you have to remember is it has to fall in one of these three cases, plus the company should have made a disclosure in the notes to accounts. Then provisions, depreciation and other estimates, whatever estimates made by management, are reasonable. Estimates made by management are reasonable. You have to see that if estimates made by management are not reasonable, then you might have to ask them on what basis did they make and everything. Then information presented in financial statements is relevant and reliable. Whether everything is relevant and reliable. And then I think that disclosures, there is a point on disclosures, whether adequate disclosures have been made, not just about accounting policies, about everything. Adequate disclosures have been made about all the events and situations whichever impact the users. And then lastly, terminology used. The terminology used in financial statements, that is a nomenclature that we generally follow, has it been intact or not? So it's a very important task that the auditor should do, called as evaluations. Once again, let me take you through the first part. So standard number 700 has two parts to the story, whereas part 1 is called as forming an opinion. As you go by the name, forming is something that is there in the head. So you are coming to conclusions. How will you do that? Check whether you have obtained sufficient appropriate audit evidences. Check whether any uncorrected, I think when I explained you materiality, I did tell you about what these uncorrected misstatements are still there. Auditors found out. Remember those mistakes that have been identified by the auditor, which have been thrown in the basket. So which means the effect is not completed yet. Though that will be taken into consideration. And we'll do the second point. Whether any uncorrected misstatements, either individually or in aggregate, are they material? Yes sir, they are material. Then communicate to the management, ask them to rectify those. If they rectify, very good. If they don't, then you have to chart your course of action. Then of course these two evaluations by the auditor. I hope you guys are making the summary along with me. If not, okay, even if you can take screenshots and make it later, I'll be happy, but you should be able to picturize the whole thing. It's a very wide standard 700 with lot of content, so you should be able to understand this in the first place. Okay, looking at yeah. Oh, fair enough. Some people have already given the answers. Financial statements provide adequate disclosure. Good. Terminology used in audit. Right. If you have any more doubts, you guys can put that in the comments. I will be happy to answer those. But otherwise, do throw a confirmation that you have understood the first part of the standard. Can I move ahead after the first part? Because now we talk about the reporting part. So can we safely proceed to the reporting part? Are we through with all the 6 steps of audit plus 7th step, which is forming an opinion? Can we move on to reporting? What do I see? Oh yeah, very good, very good. All right, very good, very good. Nice. Done then. With so much of confirmation, then I'm proceeding it off to the second part, which is about reporting, right? But before I go to reporting, now there's another interesting aspect here that is called the types of opinion. So keep this part pending. We'll come back and fill all the elements of an audit report. What are the reporting elements? We will come back to this story, okay? And we'll start with one title and then to the last date, place, and signature. We will fill up all those here. Don't worry, we will come back. But before discussing that, let's talk about the types of opinion. And like the previous session, if you guys will also share your insights in the comments, that will be amazing, right? Tell me, what are the two types of opinion? I think I have no intention to trouble you to keep typing. I know it's slightly a task to do that, but just a reassurance that all of you are with me. Okay, that's all. And it keeps us, going, like it feels like a class rather than I doing a lecture. Okay, take this break up into two. What is this? Two types of opinion. Can I see them in the comments now? Come on. Two types of opinion. Oh yes, RSC right. Two types. Okay, modified, unmodified. Oh no, Durga Prasad. Qualified is not coming yet. Two only. Yeah, this is why I wanted to, alert all of you here. Okay, very good, very good. Oh, that's nice. You guys are doing it on your own, no, not to make me satisfied. Chalo, wait, any good? I mean, like, anyways, I'm very happy that all of you are very much in participation there. But please don't write qualified and all that. That's a little task here. So let's talk about unmodified opinion on one side, which also has a name of clean report. So unmodified opinion, and then we have on the other side modified opinion. Now I have some insights to give you here. Unmodified opinion is discussed in standard number 700, whereas modified opinion is discussed in standard number 705. Now, where auditor obtains, where auditor has obtained, what is the obtain? Where auditor has obtained that, or where auditors obtain sufficient appropriate audit evidence that the financial statements are free. Free from what? Free from material misstatements. Okay. Where the auditors obtain sufficient appropriate audit evidence that the financial statements are free from material misstatement, you can go ahead and give a unmodified opinion. Unmodified opinion. Absolutely cool. But when situation gets slightly complicated, which is where 705 steps in, that is modifications happen in case of two situations. One, where auditor concludes. Now I want all of you to remember this word concludes. Guys, tell me, when can you conclude something? I would like to see these answers. Come on, when can you conclude something? As an auditor, you're talking about this, but when can you conclude? That's my question there. When can you go ahead and conclude? Do I see some answers? Come on, come on. So, if in the statement we are using the sentence as when the auditor concludes. So, my question to you right now is when can he go ahead and conclude? Okay, very good. Basic evidence obtained says that they're not free from, yeah, when he has sufficient. So, oh yes, Sangeeta, very good. Pranay, and has obtained sufficient appropriate audit evidence. Sri Lekha, Oh, Deepika, right, everybody, very good, very good. When you have evidence. So, point is clear. What is that? That he has evidence. That's all. I also want to know only that much. So, in this case, where he says, where the auditor concludes that the financial statements are not free from material misstatements, which just goes to say that he has evidence. Let me write that for you. Okay, I want all of you to understand this. When we use the word conclude, means what? Auditor has sufficient and appropriate audit evidence to say that something has eventually gone wrong. So you are not just simply talking something in the air, you are having evidence to say that. And then here there is one more reason why you go for a modified report, where auditor is unable to obtain sufficient and appropriate audit evidence, where auditor is unable to obtain sufficient appropriate audit evidence. Now this is a classic case where you don't have evidence at all. Chalo, we will discuss about these 2 points in greater detail in just a few minutes when we discuss 705, but we have still some part of 700 unfulfilled, right? We'll finish that. But I hope all of you got to know the word unmodified, wherein I'll give you why they have headed it unmodified also. I'll tell you the reason. Okay, there is a format for reporting specified in 700. 700 specifies how a clean report should look like. 700 specifies how a clean report looks like without making a single modification in that. If you are issuing it as it is, no modification, or the report is being unmodified, that is why you have the title called as unmodified. So whatsoever the standard prescribed, you are issuing the same. This is when you also can say true and fair. True and fair, that is what we are talking about, an unmodified report. But when it comes to these two situations, where you either have solid evidence to say that financial statements are not free from material misstatement, or where audit is unable to obtain sufficient appropriate audit evidence, then the report will be modified. And modified reports are further classified into three names, which are called as qualified, adverse, and disclaimer. So qualified, adverse, and disclaimer, these are the three reports that are coming into the story here. So let me move out for a second. So that what you see right now on screen is a whole picture. Got it? That exactly is something that we have to take into consideration when we are dealing this. So take a clear look at this one before we proceed to discuss these standards in detail, and do let me know if you have any questions in whatsoever we have discussed till now. Okay, very good. Yes, people have already typed in qualified, adverse, disclaimer. Very good, very good. Right? So this is about the whole story down there. I hope everybody is clear. Okay. Thanks for confirming that everything is clear. Then we are moving on now to discuss the other part of 700 which we have kept pending, which will also have which will also give you the framework as to what and why it is like that. Then we will also see, if that is the case in the report, then what sort of modifications will have to be made when it goes to 705. We will have all that discussion right now. We will go back to that story. Okay, all is clear, Amma. Very good. Thanks for confirming. So let me come back on screen here. Yeah, that's where I am. And then we can move on to discuss. Okay, we'll go back, right? We'll go back here to this space because we already created the space and kept reporting elements. Always a report starts with a title. Always a report starts with the title, which is of independent auditors report. You guys know that. Then second one is addressee. Now title and addressee are something that are very basic. So to whom is the report being addressed? To the members or the shareholders of the entity. Generally, if a company, then we'll address it to the shareholders. Generally, whoever is the appointing authority, that is to whom we will address. And you all know, we've already discussed from 139 that members of a company will appoint the auditors. So we'll address it to the members. So title independent auditors report, addressee to the members. Now this is exactly where the most important paragraph of the audit report comes in, called as the opinion para. Opinion paragraph comes in, and now in opinion paragraphs we have two sub paragraphs. Under the opinion paragraph we have two paragraphs. What is that? The first one is called as an introductory para, and then the second part is called as the opinion para, where you will mention your actual opinion. First part is called introductory para. Now, there are 5 elements in the introductory para. There are 5 elements in the introductory para. As to what these 5 elements are, this could alone be a question in the exam. It has been asked twice or thrice. So, please be careful about this one. Now, for you guys to understand this easily, I will spell out how to remember these 5 elements. See, there is an introductory paragraph. If you remember that paragraph, you can pull off all these 5 points. There is another way. You remember all these 5 points and construct that introductory para. I prefer the first one because that paragraph is very easy to remember. Then you can pull out all these 5 points. First, let me tell you what the paragraph is. The paragraph goes like this. We have audited the financial statements of XYZ Limited for the year ended 31st March, so and so 2020, 21, whatever. Okay. And read with the financial statement, the balance sheet, P&L and the cash flow statement read along with their notes. Okay. Now, listen carefully. What are they saying? We have audited the financial statements of ABC Limited. Two things they told in the first line. We have audited. So, in the 5 elements, the first element is fact that financial statements are audited. Fact that financial statements are audited. We have audited the financial statements of whom? To ABC Limited, which means what? Name of the entity. So you have to say that you have audited it. You have to also specify the name of the entity. We have audited the financial statements of ABC Limited for the year ended 31st. So it means you're talking about 3 date and period. Date and period. Okay. And you spoke about date and period, that is as of 31st March. What did you audit? The balance sheet, P&L and cash flow statement. So you said that, which is called as components of financial statements. Components of financial statement. And 5, read together with the accounting policies followed. Okay, about accounting policies, because you did mention a point in the notes. These 5 points form up what is called as the introductory para. What is it called? They form up what is called the introductory para. So this is the story there. Are you guys clear with the introductory para? You can remember these 5 points and construct the paragraph, or you can do vice versa, which is very easy. Fact that it has been audited, name of the entity, date and period, components of financial statement, and summary of accounting policies that were followed has to be told clearly. Title, addressee, opinion para, which is broken down into an introductory para and an opinion para. Now, the interesting fact that you should understand about the opinion para is it will use words called as true and fair. What will it use? It will use words called as true and fair. Okay. So that is what is the opinion paragraph. The wordings go that we have conducted the audit of financial statement. So that is the introductory para, followed up by in our opinion, to the best of our knowledge. So that is the most safest line the auditors use. What is that? To the best of our knowledge. Oh yeah, very good. All of you are even typing the answers. That is amazing. Remember that line, to the best of our knowledge. So based on the information explanation provided to us, we, what is it? We conclude that the financial statements provide a true and fair view. And when you give that, that means you are giving a confidence to those people who are called as the readers of financial statement. Done. But you should also tell on what basis. Yes, Bhavna, very good. We got to definitely talk about the next paragraph, which talks about the basis of opinion. Basis of opinion para. On what basis did you give? Now the basis of opinion will have 4 points, wherein you got to tell that you have audited it, you have collected sufficient appropriate audit evidences, and you conducted the audit in accordance with the standards on auditing as issued by ICAI. Tell all that. On what basis did you come to a clean opinion? You got to talk about all this. Now, very crucial points are 5 and 6. I want you to stay alert here. Point number 5 talks about going concern. And of course, going concern is discussed in standard number 570, wherein you say that if everything with respect to going concern is good, neither they will disclose that in the notes to accounts. Correct? Because you remember that point that you read? The use of fundamental accounting assumptions are assumed. Now, unless you don't follow something, you won't mention anything in the notes. Remember that point or not? Silence with respect to compliance with those. Silence with respect to those means what? It is deemed that they are complied. Yes or no? Fundamental accounting assumptions of going concern, accrual and consistency. We assume that the entity has a going concern. And when auditor also obtains sufficient appropriate audit evidence about going concern, he will also not make any comment about the going concern. Same is the case with another paragraph called as key audit matters. Key audit matters. Now, I'll tell you what key audit matters in just about time when we finish this session. But right now, we will just indicate that it's a 701 story. Now, a star point for all of you to keep in mind is that these two sections will, these two sections in the sense sections of the audit report. That's what I mean. So, they will not be reported unless you have any points. So if you don't have any key audit matters to report, that paragraph will be empty. If you don't have any going concern aspects, paragraph will be empty. So which means when you are reading an audit report, and you don't find a going concern paragraph, it means everything with respect to going concern is okay. That's what we are trying to say. So is the case. If you don't find any matters with respect to the key audit matters, anything with respect to key audit matters, if there is nothing, no talk about it, then which also means that there are no key audit matters to discuss. So totally we have 12 elements. I hope you guys are clear with the first 6. Can I get a confirmation at this point of time? Wait a second. We will talk about deviations. Ma, why deviations? I think who's that? We'll get to deviations. Don't worry. And even RAM, OM and EOM separately 706 we will get in. Right now we are not going in there. Okay. So let me just get off screen for a second and give you a full shot of this. So as you take this view, you can also confirm to me whether first 6 elements of the audit report are clear. Yeah. Okay, very good. This chapter is all about understanding the flow of events. That's all. There's nothing that will trouble you here. Good, very good. Shall we move on then? Right, very good, very good. Now, moving on to the balance 6 elements, they are very easy. So there is no tension about that. Let us move on from here. Will we be able to fit in here? Okay, let us continue. So element number 7. Now this talks about 7 and 8. They talk about two things which are responsibilities of management, responsibilities of auditor. Responsibility of management. Now you don't have to do anything special in this paragraph. Remember 210. In 210, we simply agreed about certain things, that management is responsible for providing the auditor with all information, additional information, unrestricted access to all the information, and it is a duty of management to establish internal controls. It is a duty of management to prepare and present financial statements and their compliance with accounting standards. It is a duty of the management to provide the said disclosures in the notes to accounts. I mean, whatever are management responsibilities, I think you know it much better than I do. So all those points should come there. Predominantly three solid points. One, preparation and presentation of financial statement. Two, design and implementation of internal controls. Three, providing auditor with all the information and all the allied points. To provide auditor with information means not only during the audit, the evidences, written representations provided by management, everything that is required for the auditor to do the audit in a smooth manner. All these are points that they have to provide us. Then what is your responsibility as an auditor? That also will be specified in point number 8. Responsibility of auditor. Now our duty is to conduct an examination. Okay, we'll do an independent examination based on the information provided to us. We will gather evidences. Yeah. And then we will conduct what is called as risk assessment procedures by following standard number 315. Then we will go ahead with gathering all the audit evidences. Correct? And the auditor's responsibility is to obtain sufficient appropriate audit evidences and then to form an opinion and then to provide. So whatever we discussed all these days, I think around 9 points, right from agreeing to the terms of engagement, following the quality control aspects while doing the audit, a lot of things that the auditor is normally responsible for. But basically his duty is to obtain a reasonable assurance that the financial statements are free from material misstatement. And so around all those points will come, around 8 or 9 points will be there. Obtaining evidence about going concern, obtaining evidence about all the judgments and estimates, right, qualitative and quantitative aspects. Now one thing that I would like to confirm to you here is, whenever we are talking about points like this, responsibility of auditor, a new point has been added in the standard number 700 here. Like, should we give all of this content in the report itself? What is the location? What is the location for responsibility of auditor? Now, when people are asking you what is the location, do you guys want to take a chance and type in the answers? Honestly, if you don't know, just type don't know. Let me see how many of you gave importance to this point while revising. Those of you who know the answer, type it. Those of you who don't know, please admit that you don't know. Let's see. It's okay. You are going to learn in a couple of seconds. So be honest. Come on. Come on, come on, come on. So, what is it? Come on. Okay. In separate para or as a reference to Companies Act? No. No, no, no. Place where he signs. Hello, Prithvi, what I am asking? I am asking where will he give responsibilities of auditor? The location of all those responsibilities. Don't know, don't know, don't know. Oh, yes, Nagesh. Very good. That's one point of the three. I meant a separate para in the report. Okay, you can do that. Yes. A part of that is correct. ABC. Your part of the answer is correct, but others. Oh, very, very bad, very bad. Hell, a lot of don't knows. Okay, I think I should step in here. Come on, concentrate. What is the location of responsibility of auditor? 3. Right, these things only will come in MCQs or somewhere in the case. Very serious. 1, you can give it within the report, that is body of the report. you can give it within the report itself. Okay, that is in the body of the report. Like where you are giving all the headings, you can put the heading as auditor's responsibility and give all these points. But sir, all these 8 or 9 points, common story. Why do you want to increase the length of the report? We will give all this after the report, and under that heading we will simply say they are given in annexure. So second option for you is to give it as a appendix to audit report. Appendix to audit report. And third one, reference to the website. Reference to the website where auditor's responsibility are available. So that means you can give a reference to standard number 700's location on ICAI's website or MCA website. There are a lot of places where the standard is available. You can give a reference to that. All those don't know, see one fruitful point from this session. I thought you should be able to catch up this one, but still it's okay. I don't really demean anybody. These are things which are very intricate. Where should you give? You can give it in the body of the report. You can give it as an appendix, that is like an annexure, or you can just refer to the website where all these are available. And this sort of a question, that where it can be given in a website. Recently I was reading a audit report where they did that. So auditor's responsibility, below that they just pasted the link where all those are available. So this is the set of points that you are supposed to do. Yes, specific reference to the site where these are available. So did you guys get the clarity on where these 3 points, where these 3 locations are? So all those don't know people, do you know it now? The 3 options, are you guys clear? If so, then we will move on to the balance part of the report, which is very, very easy. Come on, quick. Good, very good. Now you should understand, because there is a lot of scope that these kind of things can be tested in the exam. The rest of the story goes very simple, for which again I have to move off from the screen so that we will fix this up. Let's go ahead, guys, with point number 9, which talks about other reporting responsibilities. Other reporting responsibilities. What are some of your other reporting responsibilities? 143 subsection 1, if applicable. I think in the last session only I told you very clearly that if any of those 6 points that are discussed in 143.1 are not affirmative, then only you will report them. So if in an audit report you don't see anything pertaining to 143.1, that means they are all in compliance. 143 subsection 1. Then we talk about 143 subsection 3, which are about all the principal assertions. Okay. What is it called? Principal assertions of the Companies Act. Same points, all those. Whether you have obtained information, explanation, sufficient evidence, and those list of points, whether there is any qualification or modification with respect to a point, whether directors are disqualified, and that likes of all those points. And 143 subsection 3 clause I talks about whether the auditor has given an opinion on the internal financial control. Okay. So these are the points that you have to cover, and of course your favorite point, 143 subsection 11 on company auditors report order. So done. Yeah, let me just switch screens to see what your comments are. Okay. 143, 12, 11, 11. 12 is about fraud. 12 to 15 is fraud, Mr. Ram. Karo correct, but not 143, 12. 143, 11. Yeah, this is called report on other legal and regulatory requirements. Yes, you are absolutely right. And then let me also fill the space just to conclude. 10, 11 until I'm simply saying date. 11 is place and 12 is signature. Okay, that's it, done. Date, place and signature. The story is taken care of. Nothing much. So can we wrap up standard number 700? Is everybody clear about all of the story? Once last time, let me run through this for you on screen. So stay put with me. We did speak about audit reports, and when we started discussing about audit reports, we revised the entire audit procedure once. Until sixth point, we've already discussed so much in detail. And then before giving these reports, we did talk about this evaluation part so that we are comfortable with whatever we do. And then we have started discussing about these couple of points called forming an opinion and reporting. Now, whenever we talk about forming an opinion and reporting, we have to start with standard number 700. And standard number 700 is broken down in two parts: forming an opinion with these 3 points, and the third one extending with two branches called specific evaluations and qualitative evaluations. Qualitative does not involve any numbers, so you see all these points, and specific evaluations are those 6 again that are on your screen. This is the first part of the standard. Then we decided on what are the types of opinions that anybody can give. So we have two: unmodified and modified, wherein we have qualified, adverse and disclaimer as part of modified, which we are going to discuss now under these two situations. If those two situations are not there, and where auditor has obtained sufficient appropriate audit evidence to decide that financial systems are free, then you can go ahead and give a true and fair report. How do you go about giving a true and fair report? You got to get back to the elements and fill all those elements: a title, addressee, opinion paragraph with an intro para and an opinion para. An intro para should cover 5 facts. Give the basis of opinion, which 4 points are there. You might want to go there and revise them. Going concern and key audit matters paragraph will come only when something is there which talks about them, otherwise you will not talk about those. Then moving on will be responsibility of management, responsibility of auditor, a detail 8 to 9 points, complete detail about what auditor's responsibilities are have to be disclosed. You can do that in the body of the report. Maybe you can give it as an annexure or an appendix and refer to the website where it is available and just put the link out there, which also suffices the purpose. Going by other reporting responsibilities, you can give if anything pertains to 143.1 only in the event of non-compliance, only when there is any non-compliance. And 143 subsection 3 talks about all your principal assertions that you have to report, and 143 subsection 11 on Caro. Then put the date, place of wherever the signature is taking place, and put the sign. Make sure that you mention your membership number, and if you are a firm, you got to even mention your designation as proprietor or partner, and the fact that you are signing on behalf of the firm. You got to even put the firm registration number. So this is something that we have to take into consideration. Okay, yes, very good, clear, Amma, fantastic. Okay, so that brings us to a end of a very big standard called 700, which is the mother standard of the reporting series. Now, what all crop up from here, okay, is something that we have to discuss. We will go to 705, and these parts are to be discussed right now, for which I'm going to introduce to you our new word called as pervasiveness, right? And then let me also get back on screen so that you can relate to what I talk. Okay, moving on. Let's talk about standard number 705. I want everybody to stay put. Small, simple standard. All it takes is 5 minutes to understand with patience on what is the framework of 705. First of all, you should understand that standard number 705 deals with those two situations where you end up giving what is called as modifications. Okay, where you end up giving all the modifications. Okay, point coming in here. Sir, one small request. Can you upload the PDF on which you are writing in live? Okay, now that won't actually come as PDF, it will come as images and it will be a problem. But you can do one thing. I've uploaded a lot of these things, not what I write on screen, but when I did this on board, the images of all those, they are much clear. They're available on my Instagram handle. Okay, so if you go there and scroll a bit, full of standards, company audit, you will find all of those summaries. Whatever I wrote in the recent live sessions for you guys on screen, those things I've already put up as images there. You can take screenshots from there and zoom them. Great quality. Okay, because whiteboard, no, I wrote it with neat handwriting also. So you can pick up that. Otherwise, you should pull out a little patience to take screenshots from here. Let me admit the fact I don't save it here after I write, because I don't want that content after revision, so I don't save it. Even if I have to give you guys, then I have to also do the same. But like I said, whiteboard presentation is much better, which all of it is already available. And the reason that it will help people make summaries, put it on my handle. You can just scroll through my Instagram handle, you will find, in fact you will find a lot there, planning and how to write answers in the exam, some cases, how to answer true or false. There are a lot of things that I told. But again, people have their own requests, they have their people. Sometimes they'll tell me, why don't you come and write my exam? It will be like that. So can't help anymore. Now let's move on to 705, which talks about modifications, and modifications happen in case of two situations. Okay, now what are these two situations? One, where auditor concludes, where auditor, once again I will write in capitals, where auditor concludes that financial statements are not free, where financial statements are not free from, where financial statements are not free from material misstatement. This is case situation 1. Then second one, where auditor is unable to obtain, where auditor is unable to obtain sufficient and appropriate audit evidence. So these are the two situations, right? So you don't have much of a tension in discussing these two situations and what sort of a report. Now when we talk about modifications, we already discussed about qualified or adverse or disclaimer. These are the three reports that you should give. Now which report will be given in what situation? To discuss which report will be given in what situation, we have to consider two factors, not one, but we have to consider two factors. Now, I have been emphasizing on this word where he concludes, which means he has evidence. Then the next question is to ask whether such a thing is material. Whether such a thing is material. So, under both blocks, we will talk about materiality without doubt. Now I'm going to introduce a new word, not new word, I think all of you know it, but a new fact here called as pervasiveness. Now whenever we're talking about pervasiveness, we are talking about the effect that it creates. Okay, pervasiveness is all about the effect that it creates on the financial statement. Let me discuss that word pervasiveness with you, but first let me write it here. Something is material but not pervasive, while something is material and pervasive. So what does it really account to pervasiveness? That is a serious question that one has to answer. What does it account to when we call it as pervasiveness? So basically the word pervasiveness is talking about how much effect will something have on the financial statement. Okay, if you are using the word pervasiveness, talks about the effect. That word describes the effect that something has on a financial statement. Now if you ask me, sir, pervasive items, are they restricted only to items of financial statement? No, they amount to even disclosures. They go beyond the numbers also. That is what we're trying to say. They go beyond the numbers also. If so confined or restricted to anything, they will definitely represent a substantial portion. So pervasiveness is used to describe what? The effect on the financial statements. So if something is material but not pervasive, now I would also want you to recollect the definition of materiality. Huh? Back in time when we spoke about materiality, we discussed that those items which may impact the judgments of users of financial statements. So something that can impact their judgment and also affect the financial statement is material and pervasive, while something that may impact the user in his decision making but it may not really affect the financial statement so much. So sometimes items may be material but not pervasive, because let's say for example inventories are misstated, only inventories are misstated, but for that the entire financial statements are giving a true and fair view. So is it logical to go and say the entire financial statements are not true and fair? That's absurd, right? The entire financial statements are not true and fair. How will you say that? So which is why these points have come in here. And whenever a misstatement is material, but not pervasive, we will talk about giving qualified reports. We'll talk about giving what? Qualified reports. Both cases. Now, so which means whether or not you have evidence. In the first case you have evidence, here you don't have evidence. So I'm going to call these cases block 1 and block 2. Block 1 is a situation where the auditor has evidence to say that financial statements are not free from misstatement, but the effects of which are material but not pervasive. Give a qualified report. Which means you will say, except for the effects of that particular item, rest of the financial statements give a true and fair view. Same is the case with next, where you don't have evidence but misstatement is material but not pervasive, they are also qualified. Now situations when they get serious are that where they are material and pervasive. How about material and pervasive? Now that is really serious. So what sort of a report will you end up giving? So when something is material and pervasive and you have evidence to say that financial statements are not free from misstatement, you will give what is called as an adverse opinion. Will give what? An adverse opinion. And then where the last part where material and pervasive but you are unable to obtain any sort of sufficient appropriate audit evidence, which means the auditor is clear that he is unable to obtain evidence itself and therefore he will unable to make any conclusion, and which is why he will give disclaimer. He'll give what? A disclaimer of an opinion. So qualified, adverse, disclaimer, and that is how this is sorted out. So I hope this fits into your clear ideas as to which one stays where. So block 1 and block 2. Block 1 situations will have two reports, qualified or adverse. So what is block 1 situation? Block 1 is where auditor has evidence that gives answers. How many? Two, qualified or adverse. Block 2 is a case where auditor is unable to obtain sufficient appropriate audit evidence, which again has two types of opinion called qualified and disclaimer. So what are block 1 cases? Qualified, adverse. What are block 2 cases? Qualified and disclaimer. Okay, I do see a lot of people here have been giving the answers along with me, which is a very good thing to do. Is that clear? Okay, I guess that sums up whatever we have discussed in standard number 705. Now, also one quick point that I want to make is where the changes will come. Where do you think the changes will come? So, getting back to the elements, 1, 2, 3, 4. So, 1 means title, addressee, 3 and 4. You know what? 5 is going concern, 6 is key audit matters, 7 is responsibility of management, okay, 8 is auditor, responsibility of auditor. 9 is other regulatory requirements, and I'm not writing 10, 11 and 12, you know what they are. Okay, now why did you list down all these points again, sir? Because I have an important point to make. So nothing will be problem with the title. Independent auditors report addressing opinion para. Now this part will have a change. What change? Earlier you put the heading as opinion para, right? Now it will become as dash opinion. What will it become? It will become as dash opinion. Sir, why dash? Now I don't know which report you will give, right? So therefore, if at all you are giving a qualified opinion, then it will be qualified. If you are giving adverse, heading will be adverse. If you are giving disclaimer, you will give disclaimer. So uh, in the dash, whichever opinion you are giving, that will come as a heading. And then opinion paragraph is broken down into two, right? One intro para and one opinion para. So in this opinion para, wordings will change now. We will not again go and say we are giving true and fair. Definitely some wordings will change. And then the fourth one, heading will become basis of dash opinion. And what is this dash that is coming here? This will totally be again qualified or adverse or disclaimer depending on. So these two are critical changes in the 705. Okay, is the story. Understood? So title, addressee, then rest of the story is something that you already know. This is what I want to make up a point. Now when you talk about wordings in qualified, what will we tell? In qualified we just go about telling that we are giving an opinion except for the matter stated in the basis paragraph. Financial statements present a true and fair view, because except for those effects, because one or two items are only qualified, rest of them give true and fair, no? Okay. But when it comes to adverse report, you will clearly go ahead and say, because of the significance of matters mentioned in the basis of adverse para, the financial statements do not give a true and fair view. Adverse means exactly opposite. So in 700 you told you gave a clean opinion. Now you will go ahead and say it's absolutely not true and fair. Then moving ahead from there, what we have is a disclaimer of an opinion. Now in disclaimer of an opinion, you will have to again give in the basis paragraph the reason as to why you disclaim, and then in the wordings you will have to say, because of the significance of matters mentioned in the basis of disclaimer para, two things you have to tell. We are unable to obtain audit evidences and thus we are unable to express an opinion. You have to make this clear. Are you guys clear with all these wordings as well? Now after listening to me, if you can go back to your book and rerun this story, I think that will be way more simpler. Okay? Yes, ma. Now don't take the pain of typing the wordings, but I guess if you know it, very good. Otherwise, whatever I told you the three ways, please just go and revise them once again. Things will be way more cool. Okay? Got it? Okay, absolutely cool. Yeah, very good. So can we move on to 706, wherein I'm going to give you a quick insight about EOM and OM. I think we are going very good in today's session. So we're 1 hour 10 minutes into the session and we have wrapped up two fantastic standards of audit reporting. Now of course we have two more small standards to quickly catch up and close the story of 706 and 701. So I think I'm moving on to 706, hoping that all of you are absolutely clear and those of you have confirmed, very good. The others, I'm taking your silence as an acceptance. Okay, chalo. Then moving on, wherein I have SA-706 with two branches with nothing much to talk about on EOM and OM paragraphs. Now, two very important facts, and you got to have a clear idea as to when you should give what. Now EOM is that paragraph that is introduced when a matter has been presented in financial statement, okay, or when we'll say that, okay, I'll just write this, when a matter has been presented in financial statements. So it was a responsibility of management to present something. Did they do that? Answer is yes. The management has presented in the financial statements whatever it's supposed to present, it has presented in the financial statement. Now what does auditor think? Where auditor believes that a matter which has been appropriately presented, where auditor believes that a matter which has appropriately been presented in financial statements is of significance to the user's understanding of financial statements, then auditor will give an EOM. He will emphasize. So you're not doing anything new. Already the content is presented in financial statements in the notes to accounts. You just have to emphasize. So by introducing an EOM paragraph, the auditor will draw attention of the user. Let me write that word for you. So in EOM, what is the auditor doing? Only draw attention of user. Draw attention of user to the relevant location in financial statements. So you already know that it is given in the financial statements. All you want to do is just okay, present it there. Okay, this is the story which you have to catch up and understand. So of course this is EOM. Then OM paragraph. Now where auditor believes that, what does he believe this time? Anybody wants to take the answer? OM. What about OM? Where auditor believes that, okay, I'll not waste your time. Where auditor believes that a matter is of such importance, where a matter is of such importance that it is fundamental, for users understanding of audit or auditor's report or auditor's responsibilities, then he will introduce a paragraph called as OM. Now these matters are not available anywhere. So whatever matters you are giving in other matters paragraph, not available in financial statements. Okay, because these are not matters that concern management. These are matters that concern audit report. I mean the auditor, audit report or auditor's responsibilities. Nothing to do with financial statements, which is something that you have to clearly understand. And big question, where will you introduce EOM and OM? So I'm going back, and anybody wants to take a cue, where will you introduce EOM and OM? I want to see the answers. Come on, quick. opinion paragraph, after opinion, next to opinion para, after basis of opinion, separate section. Guys, hey, come on, what's happening? This is not something that I expected from you guys. Come on. Hello? This is too much. If you are not sure of this, guys, the location, guys, of all this, array, these are some things, you will lose your marks for. Okay, so I don't know how you guys didn't really concentrate on this one in the past. Okay, this has to be something that you should very clearly know. See, there is key audit matters paragraph and going concern. I told you it will come only when they are there. But this one you have to understand. Below key audit. No. Okay, let's not spoil our idea. Remember this. Okay, above the responsibilities of above other regulatory requirements. Okay, let me not disappoint you. Key audit matters, responsibility of management, responsibility of auditor, and before you give other regulatory requirements, this is exactly where EOM will come first. If EOM is not there, OM. No sir, if both are there, what to do? EOM first and OM next. EOM first and OM next. Oh, please mark them. Okay. Arey, how can you not know this, guys? Come on, this is too much. Okay, so I hope all of you are clear where it is going to come. Please refer to a sample report to be doubly sure. Guys, I just want you to be doubly sure. Report on other legal and regulatory requirements. A paragraph is there like that. No, exactly above that, EOM and OM will come. Okay, so please be sure about that. No, not after basis paragraph and all that. Don't try and complicate. Yes, some of you got it right, but then others, it's okay. That's the learning that we need to have. And that brings us to the end of all the three reporting standards of 700, 705 and 706. Now, one important point that we'd also want to look at is what constitute to a key audit matter from standard number 701. Now, for you to know 701 thoroughly, there is another important thing that you should know, which is called as 260. Okay, which is called as, so for knowing 701 on what constitute to key audit matters. So SA-260, a quick insight for you, talks about communicating matters to the TCWG. Now there are some specific matters that we will communicate to the TCWG, that is those charged with governance. What is the definition of key audit matters? Listen carefully. Very easy definition. Out of the matters communicated to TCWG, those which are of most significance, to the members, or say to the users of financial statement, they will be selected and called as key audit matters. So one thing that you should be very clear about, key audit matters are not something new. Out of those matters that you already communicated to TCWG. Sir, you already communicated to TCWG. No. Why are you communicating again to the members? What is your problem? Two things. Reasons. Let me write that also. Reasons. Okay. To enhance transparency. To enhance transparency. When you know that something is such a key issue, why should you tell only the TCWG? Don't you think you should go ahead and tell it to the members also? Huh? So it's better that you tell them no, so that later people will not blame you. Why you told only the TCWG? Maybe you should have told us, and then we would have decided. Why should you, take all that? Huh? So the very reason. So it just increases what, as an auditor, you are communicating to the members. Two reasons: enhance communicative value. Enhance the communicative value so that the readers of financial statement will start trusting you as an auditor more. To enhance the communicative value and transparency. To enhance transparency. Let's be clear as an auditor. That is the reason why we communicate key audit matters. No doubt this has already been communicated to TCWG, but we are going one step ahead and communicating this to the users of financial statements also. How? Write a paragraph with a heading called as key audit matters, and you already know the location for this. Point number 6 will be this place where key audit matters come. Okay, so now we are left with only one simple question here. Sir, what constitutes a key audit matter? What becomes a key audit matter? Or rather I should say determining the key audit matters. How will you determine what matters become key audit matters? So you have to take three factors into consideration. Okay, a very easy. Point number 1, areas of high risk. Areas of high risk as assessed under SA-315. I hope you did risk assessment procedure, and then you listed down all the risks. In those areas of higher risk, wherein you think that there is a high possibility of a misstatement. Then second point is areas which have high estimation uncertainty. Areas which have high estimation uncertainty, like those areas, useful life of the asset, depreciation, provisions, classifying a debt as a doubtful debt or a bad debt, all those where there is high estimation uncertainty. That means there is a scope of somebody's judgment going wrong drastically. Okay, and some of those, the third point goes by significant events or transactions. Significant events or transactions. Significant event or transactions that occurred during the year, which merit the attention of users. So you as an auditor believe that, yeah, I guess these are matters that members should know, so why not communicate? Did you already communicate these to TCWG? Yes, but you believe that it's even more significant for you to communicate to the members, and that is why they turn out to be key audit matters. And if it falls in any of this criteria, that it's an area of a high risk, or it's an area of a high estimation uncertainty, or it could translate into significant event or transaction that took place in the year, then that exactly is called as a key audit matter. And remember, disclosing key audit matters, or sorry, not the word disclosing is not right, putting key audit matters, or making sure that you present the key audit matters in audit reports is not a substitute. Okay, key audit matters you giving is not a substitute for one, management disclosures. Okay, let me tell you this. Okay, I'll use something else so that you can see the 4 points here. And for a second maybe I will also vanish so that you will have enough space to get all these 4 points right. Okay, communicating key audit matters, you just communicated key audit matters doesn't mean it's a substitute for any disclosure. Management's disclosure they should do. Okay, it's not a substitute for one, management's disclosure in financial statements. So whatever disclosures management have given the notes to account, they should anyway do. It is not a substitute for a modified opinion. It is not a substitute for a modified opinion. So if it merits a modified opinion under SA 705, you give SA 705. You should not give as a key audit matter. And it is not a substitute for going concern aspects. For anything with respect to going concern, then you have to report as per SA 560 in the separate 570, sorry, on the separate paragraph that was given. You have to report it there and not club it under key audit matters. And then fourth one, there is a residual category where any item requires a separate opinion. If you believe that on individual matters, so if you believe that individual matters require separate opinion, then you have to give a separate opinion and not club it here. Okay, let me write this in a little more clear manner so that you guys can take a screenshot. It's not a substitute. Are you clear, guys? These two things can come in the exam. Define key audit matters and how will you determine. So you have to write this definition and these 3 points. Or sometimes we can ask you define key audit matters and explain what is it not a substitute for. Okay, so both of these have already appeared in the exam. So I guess you should be, yeah, very good. A lot of people have given this answer right. It's not a substitute for disclosures in financial statement, not a substitute for modified opinion, not a substitute for going concern and individual matters. Yes. Okay. So yes, Ram, Sindhuja, Vamshi, provision for tax. Acha, you mean to say some significant? Okay, I don't know for what did you say that. So related party. Okay, then I understand. That means it should be for some key events. Did you already communicate this to the top man? I mean TCWG. The answer is a yes. Okay. So that is what is the set of all these standard. Done, guys. So I hope you are happy with this part of the session which discussed completely about audit reports, and I guess that should have been a great revision of all the 4 standards. And I did not expect some of you not to know certain points, but I guess now everything of that is as well sorted. So yes, I do think it's a great learning from several perspectives. Okay, I think that should be the end of audit report discussion, and I would be very happy to see your feedback or your confirmations of a yes on that part. So all the 4 standards, right? So we are talking about, oh yeah, I understand now. Yeah. So for the 4th part, right? Individual matters you typed. Very good, very good. Right, I understood now. So that brings us to the end of all these 4 standards on reporting, which talked about unmodified opinion, modified opinion, and giving 2 paragraphs called EOM and OM. And then we also have spoken about the key audit matters paragraph. Okay, very good. Then can you provide an ABC analysis of standards and auditing? Ram, I think I've discussed in my very first session the flow of standards that you have to go with, starting with 210 and the flow of standards. And I've mentioned it so many number of times in the, I think there is a video which explains you the pattern of preparation. The link is in the description of this video. Might want to just go there and, take up that flow. Okay. That is guide on how to prepare the audit paper is also there. Please check the description of this very video. There are links to lot of old videos of mine where I've explained all this. Please do take care. And otherwise also I will give you a quick insight in the last session that we do. Okay, so yeah, now the thing that is left out is Caro. I think I will cover that in some other session, or if not, we will see, because you can go back to a a session. That is, I don't want, it's a Sunday night at 10, and I don't want to start Caro now because it's going to take another 40-45 minutes just to revise. So it is already there in our previous video. So if you really want a revision of Caro 2016, you can comfortably go there and revise it. If you have any doubts, I'm anyway going to be coming up live in the next session. So we will always come back and catch up on those things. Also, one more thing that I want to tell all of you is there is a playlist in this very channel for all the quick revision videos of audit. In that, standard number 240, 250, okay, fraud related and compliance with laws and regulations related things are there. So you might want to go there and visit that particular video also for those standards, right? And the next one is scheduled up for some of the aspects that we have to talk on I think other aspects, right? Just give me a quick insight about what that is. I would just want to go and see. Sir, if you want to start preparation now, can we complete the syllabus? Of course, if you determine, you can do it. See, again, it depends, how you follow the flow and channelize. If you are well versed with knowing what content is there where in the syllabus, I think just to revise, definitely the time is sufficient. But if you are trying to start uh, then now as a beginner or as to start learning new concepts, then that will be a challenge. But for that, I think you can comfortably go ahead. Thanks a lot for your efforts, students. Daily I am, counting all your blessings of all these thanks. Chalo, very good. So on that note, for today, that too, appreciate you guys in joining on a Sunday night, and that just shows your dedication towards what you're doing. So I want you to keep it going, and we have a lot more sessions coming up in the week. Yes, audit of financial statement, bank audit, special audit. Chalo, we will catch up with all those because there are a lot of marks in that which people simply let go of. We should make sure that that doesn't happen, and which is why we will come back on that. And if you go to the playlist and the previous video, Caro revision is there. If some of you want it, you can go for it. Okay, so I will see you soon in the next live session. Thank you. Good night.